Healthcare and senior care is fraught with problems and challenges, but we're also seeing some amazing new clinical treatments and resources. This show will help illuminate and uncover the good, bad, the ugly in order to equip patients, families, and other healthcare providers. Welcome to Senior Care Confidential.
Hi, good afternoon. Welcome to another edition of Senior Care Confidential. I am here with my friend Eric vanGoethem again from Amada Senior Care. And I have him on today because while I get to bill insurance and I'm pretty well versed in that area on the medical side of things, the side of things that I'm not really that well versed on is the actual long-term care insurance side. So we do get requests from time to time from long-term care insurance policies who are asking for clinical documentation from us. But outside of that piece of it, I virtually know nothing. It's kind of like our VA talk all over again. And so I figured Eric can help come in today and shed some light on that. So what are some of the top things, the top questions that you have from your clients about these long-term care insurance policies?
Sure. Appreciate you having me back, first of all. And I'll stop pounding my ring on the table. Number one thing is always who pays for caregiver services. And a lot of folks will think that they have caregiver or home health aide coverage through their Medicare. And they are... they're surprised to find out the limits of the home health aide or the bath aide coverage that can be provided under their Medicare insurance.
Right. Because if it is covered, it's designed to be very short term.
Exactly.
And they're needing longer term help.
Correct.
Yes.
And it's generally a bath aide stopping by for 30 to 45 minutes, a couple days a week for a couple of weeks. It's not going to be somebody that's going to stick around and assist with your activities of daily living for a long, 4, 6, 8, 10, 12-hour shift.
Yep.
So that's number one, is the fact that the only type of insurance that is designed to pay for caregiver services is long-term care insurance, specifically designed to either reimburse or cover the cost of a caregiver, CNA, or home health aide to assist with your activities of daily living.
Got it.
That's number one. Number two is... kind of quoted some stats in our pregame here, and that's that about 11% of Americans, 11 to 13, depending on who you ask, have a long-term care insurance policy. Here in Texas, we're blessed, and about 20% of our population has a long-term care insurance policy. Now, the commonality of all the people that I've met with long-term care insurance policies is that the majority of folks, even if they have a policy, they don't fully understand the benefits in their policy, or especially how to access the benefits of their policy.
I have had patients of mine, and I don't know, it's, the contract language is weird, but I've had literally patients of mine say, hey, can you explain this to me? I'm like, oh, no, that is.
Yeah.
So, so you can imagine we've got these older folks who, some of them, a lot of them honestly have some cognitive decline, yep. And they've got this legalese, written document, yep. With all these different clauses or whatever. And they're like, can you help me make heads or tails of this? So I'm sure you guys get that a lot too.
Absolutely. So we're set up to handle those situations. That's kind of where we shine in the market. But what we're seeing, especially in the past 6 months on the claims side, is we are seeing long-term care insurance companies push more and more and more of the claims process back onto the claimant or the senior that is needing the assistance with their activities of daily living or has cognitive decline. So they are pushing more of that process back onto the insured or their power of attorney, whereas in a lot of cases, agencies like mine were assisting people through the process because it is so convoluted.
Got it. Okay. So they're creating more barriers for them to actually access it. Is it what it seems like?
That's what
whether
it feels
it was
like.
intentional or not.
Sure.
If they're not allowing the agencies to kind of help quarterback it and help guide them through the process, they're now not allowing y'all to do as much of the back end work to help them access it.
Absolutely. And that appears to be one of their strategies. Of course, I'm not in their board meeting, so I don't know exactly where the strategy lies, but there are rate increase letters that go out on a fairly regular basis. When you bought a long-term care insurance policy, Because today we want to focus on people that have existing long-term care insurance policies, not necessarily folks that are looking to buy new long-term care coverage. So folks that, they bought a policy in, 2006, 2003, 1999, 2012, whatever it was, generally the policies that were being sold at that time were traditional long-term care insurance, where you're buying a bucket of money, where at the time you need care, there's this bucket of money out there, and let's say it's $100,000, $300,000, whatever it is. And if you want to access that bucket of money at some point, you have to pay these premiums, and you pay your premiums on a monthly basis, an annual basis, et cetera. And you pay them all the way up until the time that you become claim eligible. And becoming claim eligible is another really big question for folks, because they'll come to me and they'll tell me all the things that they need help with, that they need help getting to the doctor, remembering to take their medication. They can't stand and cook a meal. We need somebody to do meal preparation for us. All sorts of things. I need help making the bed, doing the laundry, some light housekeeping around my house. These are all things that caregivers in our world can do. Not one of those things is generally a covered trigger to activate a long-term care insurance policy.
Interesting. Okay. I'm glad you mentioned that. So there's instrumental daily activities.
Those are kind of all instrumental activities of daily living.
Those are not
generally. Those are events. Not. I've seen a couple policies where you can be dependent or need assistance with 3 or more of your instrumental activities of daily living.
Yeah.
But the majority of long-term care insurance policies, I would say probably 90% plus, have a 2 ADL.
Dressing, bathing, toileting,
transferring continence, and eating.
Got it. Okay.
Activities of daily living threshold. So generally that is the functional incapacity threshold, is needing hands-on or standby assistance with 2 or more of your activities of daily living. We get into the minutia of what is a standby assist. Correct. What does that mean? And so folks will think that they need to be on their deathbed to file a claim, where the bar is lower than that, because a standby assist, that can be something that somebody can realistically meet under a nursing assessment, to need a standby assist with.
If you're fall risk.
Absolutely.
Right. That's an easy one.
Absolutely. So you've got that aspect. The other aspect is, so you've got ADLs that are somewhat easier to qualify for lack of a better term, than people think they are. And then you've got ADLs that are much harder to qualify for than people think they are. So the last one we kind of glazed over was eating, and people will think that I can't stand in the kitchen to make my meal. I can't get to the grocery store. Surely that would qualify me for eating or feeding. It doesn't. The way that the question is phrased, when the claims department or the claims department's nurse comes to do your assessment on the eating or feeding ADL, is literally, once a meal is prepared for you and set in front of you and cut up, are you able to feed yourself essentially fork to mouth?
That's right.
And that's the only part that's covered.
Yeah.
So that generally that's one of the more difficult ADLs to qualify for. Most people can fork to mouth feed themselves once all those other steps have been.
Right.
And my question is always to the insurance company, well, who's going to do all those other steps?
Right.
For these folks that live alone.
Yep.
But that's
where
threshold.
they would get it on transfers and mobility.
Correct.
Because if it's unsafe for me to be working in the kitchen, then the meal prep stuff is going to qualify me.
Yep, absolutely.
Yeah, you just can't do it on the eating one by itself. They got to segment it somewhere. So what is this elimination period? Because I hear about this, and I think this is some of the reason why I get these letters requested from, whether it's Genworth or John Hancock or whatever. They'll send me a letter requesting medical records, because it sounds like they can use our therapy assessment and nursing visits, like the number of visits we've done, to help achieve this elimination period, which sounds more like it's almost like a deductible, like you're paying for some time before the policy kicks in. Yep.
So a lot of these policies, every policy is going to have some sort of elimination period. A lot of policies will have different elimination periods for different levels of service. So there are policies that cover home care, assisted living, nursing home, memory care, all sorts of different adult daycare. There are all sorts of different levels of care.
Do they line item those things out, or is it just like a blanket? Hey, we're going to cover whatever you need.
They're line itemed.
Okay.
They have definitions. They have I like to call them a Mad Libs definition, or choose your own adventure, because you've got to get one definition will define another term in another definition. You've got to read 6 definitions to figure out what one thing means.
Like a crossword puzzle.
Yeah, only worse. And then you're supposed to do that when you're 90 something and need assistance with your activities of daily living. And then you're supposed to go file your claim yourself online with a new portal and a password that you have to remember. It's great. So the elimination period it's just like your deductible on your car insurance. It's the part you have to pay for out of pocket. A lot of people get very frustrated by the need to pay their elimination period, because generally when you're going to activate your policy for the first time, the maximum amount of care that you need is right up front, because you're generally coming home from a hospitalization or rehab. Yep. And generally the care that you need is front loaded, because you want to make sure that you're safe when you get home.
Correct.
And when you're paying for those first days of service out of pocket, those are the big days, and those are the days you really want to use the policy. But you got to remember, these policies are designed to be long-term care. They're not designed necessarily to be short-term care.
Sure.
So once you meet that threshold and you access the benefits of your policy, then you should have, hopefully, depending on what you bought, really good, consistent benefits over the long haul.
Okay, so let me ask me this: let's scenario. So let's say I fall and break a hip, got to go to the hospital, have surgery, go to rehab. I want to go home. Not quite. I know I'm not safe enough to be at home, around the clock by myself yet. So I have access to this long-term care insurance policy. Let's say I've got, some other chronic illnesses too. So it's not going to be a fast recovery, right?
Sure.
And so I want to be able to access my long-term care insurance policy. If let's say it's a 30-day elimination period. So I got to pay for the first 30 days on my own. And then after that, it's all picked up to whatever my cap number that I bought is, right? What if I recover enough to where I no longer need the in-home care, but next year I fall and break the other hip? Is it, once I've met that elimination period the first time, is it done, or do I have to meet another elimination period because now I've canceled services?
A lot of great questions, lots to unpack there. Trying to figure out where I want to start. Let's start with the initial fall and how you handle that hospitalization. It's really important to understand the way your elimination period works and the way your policy works before you have a need to use it. Because where you decide to recover can affect how much you have to pay for that elimination period out of pocket. Because you alluded in the last question about long-term care insurance companies reaching out to you for invoices and documentation to potentially satisfy elimination period days for your clients.
Right.
The same thing can be said for certain rehab facilities and certain skilled nursing facilities. So if you are recovering and you're making the choice to either go home or to spend an additional couple of weeks in a rehab facility, if the rehab facility is one that could be covered as a covered service under your long-term care insurance policy, then there's a possibility of using those days in the rehab to decrease the number of days that you have to pay out of pocket. So that's number one.
Does that happen with all rehab facilities and skilled nursing facilities?
So it depends on how they're licensed. They have to be licensed as a skilled nursing facility. If they're licensed as a hospital, then they're not going to get the same benefit.
Oh, I had no idea.
So where you discharge from the acute care hospital to the rehab makes a really big difference. Are you going to do rehab? It depends on how the policy is written.
Because here's where I'm going. So if I'm the guy with a few chronic illnesses and I've got this new hip fracture, my choice of going to a rehab hospital or a skilled nursing facility could actually benefit me or hurt me on the access of because the rehab hospital is usually 10 to 12 days and it's considered a hospital, so it would not fall into the elimination period.
Correct.
But the skilled nursing facility has convalescent care there with caregivers, and like Medicare by itself, not to mention the Medicare Advantage plans, but Medicare itself, like the first 20 days are covered 100%.
Exactly.
And then I think the next 80 days are covered at 80%. But if you have a supplement, they kick it in there. I might actually get my entire first 30 days, assuming I have the elimination of 30, my first 30 days covered through my
Absolutely.
medical insurance and never have to really pay out of pocket stuff.
And you've got plenty of folks that have had your services before having a hospitalization. And generally these companies they'll do a look back a year, 2 years and let you look back and qualify your services from 6 months ago.
We've had them where they've been discharged.
Exactly.
And we've gotten requests for them. So I have seen that. Okay. So now what happens if I fall again? And let's assume I don't need the caregiver services.
So in your scenario, we've got that broken hip. We've got our additional chronic illnesses. We receive 6 months of covered care. One of the things that probably happened during that 6 months is that the majority of these policies have a clause called the waiver of premium.
Okay.
Which means that as soon as the insurance company starts paying you, you stop paying them. So in a lot of policies, vast majority, when you start receiving benefits under the policy, somewhere in that ballpark, plus or minus 30 to 90 days, you stop paying your premiums.
Okay.
And you don't start paying your premiums again until you recover and go off services.
Okay. That makes sense.
That's how it works.
It's weird, but that makes sense. Okay.
That's how it works. So if you recovered, you stop receiving services, you have to start paying your premiums again to make sure that your policy doesn't lapse. We're going to assume that you did that.
Do I get mail?
You started paying your premium. You do, but you're going to want to call your insurance company and say, hey, I stopped receiving services. Start billing me again, because they're not going to assume that you stopped services. They're going to assume that your agency is behind in billing when they stop receiving invoices.
Okay, that makes sense. Okay.
And so you're going to want to start paying your premiums. You're going to want to be proactive about that.
Yep.
But let's say you make a full recovery and you don't need any additional service for a year. A lot of these policies have another benefit called the restoration of benefit. And I'd say that one's probably about 50 to 70% of policies have a restoration of benefit clause. And I'm talking a traditional long-term care insurance, nothing that's been sold in the past probably decade. What I'm giving these percentages. I'm talking about what I come across these days, which is generally people that are in need of care now. They've had their policy for 20, 30 years. These are the policies I'm kind of lumping all my anecdotal stats into, if you will. So that restoration of benefit clause states that if you fully recover and you don't have or need assistance with those activities of daily living for a period of 6 months or 180 days, we check the verbiage of the policy, then they will restore your benefit back up to the maximum amount. So let's say you've got a $200,000 maximum lifetime benefit on your policy. During those 6 months, you used $30,000 of it. Then you recover and your maximum lifetime remaining benefit was $170,000. Well, after 6 months, they restore it back up to $200,000. So you get your money back.
That's nice.
That's what you're paying for with these premiums every month or every year.
Okay. So assuming I have that restoration policy or not, if I need care a year later because I fell again.
Do I have to meet my elimination period again?
Yes.
Maybe.
Okay.
These are all the questions that you want to know ahead of time. You want to make sure that you do a full policy benefit review.
Because if it's kind of like the deductible, right? I got to meet a deductible every year for my health insurance.
Sure.
It kind of makes sense to me where if I recovered in 12 months later, there's probably a period of time. It would make sense to me where they'd probably have another elimination period.
So the majority of policies actually work the opposite, where you don't have to meet your elimination period again.
Just one time.
It's one and done. For your entire life. So once you've met your elimination period, then you're set for life on the elimination period. There are a minority of policies out there that have an every claim elimination period where you will have to resatisfy the elimination period for every claim, but it is the minority of policies. So
gotcha.
At the end of the day, there is no commonality of every single policy other than the way that they're structured.
Yep.
But what each one has is going to be very, very specific. And understanding what you have makes all the difference in the world, because you can have the same person that has, say somebody's got $200 a day, but they've got a daily benefit, and then somebody else has $200 a day, but they have a monthly benefit. Mm-hmm. If you're not coming off of a hospitalization, then most people will start off with a care plan that you only need service, 3-5 days a week. And so having a monthly benefit allows you to spread that over more days.
That's probably the majority of what I've seen.
Yeah. So you don't. I mean, people have family around on the weekends, et cetera.
We have seen some that were written kind of strangely. It was like consecutive days. And you're like, okay,
there's everything.
This is the most bizarrely written contract. But anyway, so you mentioned in the pre-show stuff, there's a difference between an indemnity plan and a reimbursable plan.
Yeah, a reimbursement plan is going to pay for billed charges up to the limits of the policy.
Are they contracting directly with you, like they are reimbursing the private duty company, or are they reimbursing the family?
So that goes through. That's called an assignment of benefit, much like the medical world.
Yeah.
A reimbursement policy can be eligible for an assignment of benefit where the insurance company would pay us as the provider directly up to the limits of the policy. In that case, the family would only have to come out of pocket for any coverage if your provider is willing to take an assignment of benefit. There are a lot of agencies that don't want to take an assignment of benefit because it takes so long to get paid. They want to just take the family's credit card, run the credit card, and the family waits to get reimbursed.
Got it.
But there are agencies like ours that will accept an assignment of benefit, and we wait to get paid. We bill the insurance company directly.
Welcome to my
that
world.
Only works. That only works on a reimbursement policy. And indemnity policy means that as long as you receive covered services during the period of coverage, whether that's a day, a week, or a month, then you are indemnified against having that need. So they send you your full benefit for that period of time.
Like a monthly check, regardless of how much.
If you have a monthly indemnity policy, you get a monthly check. If you have a daily indemnity policy, then on every day that you receive services, you get that amount of money, regardless of whether or not you receive that amount of billed services.
Wow.
It gets even more convoluted because now there are, when they're doing these rate increases, they're giving you options and they're changing the terms of your contract every time they send out one of these rate increases. You can check a box and keep your same coverage and your premiums go up. Or they'll give you options A, B, and C, and then it gets even more convoluted.
Oh, Lord.
And sometimes they'll pay only 90% of billed charges now, or 80% of billed charges now. So no matter what, you're going to have out of pocket if you take that option. And so the other thing to really understand is that just because you have a contract from 2002 and we're looking at it, that we still need to call the insurance company and verify what is in force today to understand what changes have been made along the way. I had a lady that
because a signed contract no longer, if they don't have all those,
she signed away her inflation rider because her premiums were going to go up too much. So instead of having, I think she thought she had $9,000 a month, and she needed every bit of that. This was 4 years ago, and really she had $4,000 a month. And so that delta of $5,000 a month made a really big difference in the way they were able to care for her.
Wow. Yeah.
So it's really important to understand what you have and to understand it before you need it.
Okay, so this goes back to our VA conversation about how convoluted some of the stuff is.
Oh, yeah.
Who do they go to? So if Mr. and Mrs. Smith are on their own, like the kids maybe not involved, they've got their own careers or whatever, and they're trying to navigate all this kind of stuff. There is just, it's so... There's so many details and there's so many legalese things, and where do they go to get assistance with this?
So a lot of folks will go to the agent that sold them the policy. A lot of times these folks, their agent is no longer selling insurance.
Yep.
So they're called orphan policies within the industry. That's a great place to start. You definitely want to have a relationship with your carrier and your sales agent. The problem with that is that those folks know how to sell the policy from a conceptual point of view. They don't necessarily know how to file a claim or how to pragmatically talk about using it.
They're kind of like the health insurance brokers who have no freaking clue about what the policies are that they're selling people downstream the providers have to deal with. Correct. And all the access to care. Exactly. So it's the same thing. Like they know it from what Jen Worth or from what John Hancock is saying. Hey, Correct. These are the benefits of our plan. They don't know downstream what does that look like when you're actually trying to access it.
Sure. And I mean, that's what we've built our reputation on is long-term care insurance claims advocacy. So Any Amada senior care location across the country would be able to help you with this. We are all trained and we've built our businesses on long-term care insurance claims expertise.
That stuff. Yeah. Okay.
So we've got a process for it. Personally, this is how I've built our whole business. So
got it.
Not to give away the keys to the kingdom.
No, I gotcha. So if we have local residents here or families here who have a long-term care insurance policy, they may or may not understand,
sure,
or they just want to go, hey, we're trying to be proactive and kind of understand what we have, so that when and if something happens for mom or dad, we kind of have our ducks in a row and kind of understand what kind of care we can access. They can contact you.
Oh, absolutely. I mean, my personal goal is to review every single long-term care insurance policy in my service area before they ever need to use it.
There you go.
I do that visit for free. We don't bill for that. But the whole point is understanding what you have before you need to use it makes all the difference in the world.
And I'm going to say this again. I completely agree. Not from the broker side.
Yeah.
You have to understand it from the provider side, because the providers are actually the ones who you're going to look to eventually to provide care. It's the same thing on the long-term care insurance side on for y'all, and the health insurance side on mine.
Yep.
The brokers only know limited information that the actual insurance companies are giving them. They have no idea the impacts of those things long-term. So the best people to talk to in terms of what am I actually paying for is actually your providers.
Yeah, and we're the folks that are filing claims every day. Correct. So, I mean, I can tell you the nuanced differences of what I've seen in the claims process with the same carrier over the past 6 months, because I've filed 6 different claims with that carrier.
Right.
And I've seen the process change, and I see it change month to month, week to week sometimes. So I can identify those things because we're actually the ones doing the process.
That's right. That's right. Very good. Okay. And one last time, I know we did this last time.
Yeah.
How do people get in touch with you?
Cell phone's best.
Okay.
My cell phone is 334-663-2333.
And then online, it's Amada Senior Care.
It's just Amada Dallas.
Amada Dallas. There you go.
AmadaDallas.com.
Got it.
That'll redirect to everything you need from us.
Awesome. Well, you'll be getting on my calls for these long-term care insurance policies.
Well, I appreciate you having me back.
Yeah. Thanks, man. Appreciate it.
All right. Bye.